Thanks, everyone. Welcome to a very special live, well, they're all live, but a episode of the Daily Objective in front of a live audience here at the Ayn Rand Center, UK London Christmas party. I'm joined by Keith Weiner. Longtime viewers of this channel will know him. He's been on before. He is the founder and CEO of Monetary Metals, and today we're going to talk about Bitcoin. Should you put your money in Bitcoin? What's Keith's opinion? I think people who know you know your opinion of Bitcoin, but people who don't know you will find out soon. For the first question, since we do have a sponsor for today's episode, as you may notice, Silver Rose Bakery. The first question is going to be from the owner of Silver Rose Bakery, Michael Sweet. Michael asks, Keith, is allocating 1% of my portfolio to Bitcoin a good idea or bad idea?
You know, I think I kind of want to take a pass on giving investment advice. Bitcoin's extremely volatile. It could be $1 million or $1 and probably will be. And, what are the odds of that? I don't think anybody knows, and certainly not the people that are predicting $1 million, and certainly not anybody else either. I think I really don't want to try to go there and talk about where its price is going to be in the near term.
Okay, so I'm going to go to the next question, which, I don't think it's asked for investment advice, but this is from Alexis, who is here in the audience. Alexis asked, Bitcoin has recently reached $100,000. Everyone who has been betting against the project has been proven wrong. What do you make of it? What does it say about the investment landscape?
What do I make of it? Where do I even begin to start on something like that? Anybody who knows me and my writing and my tweets knows that I'm not a believer that Bitcoin is money, or that Bitcoin is sound, or that Bitcoin has economics that will allow it to ever work as money. That said, clearly there is a Bitcoin fever going on right now. There's also a fart coin fever and a lot of other things going on right now. And I think what it says is the investing public is desperate for whatever bubble they can pile into and speculate on. People crave returns. They see something going up, they pile in, it becomes self-fulfilling. More people pile in, it becomes self-fulfilling. Right now, of course, I think there's a great expectation that the US government is going to buy hundreds of billions of dollars of Bitcoin and be the exit liquidity for everybody. And so who wouldn't want to pile into that trade? Problem is maybe the US government will do it, maybe it won't. And, trying to predict political moves is, it's difficult at best.
So the Hawk-Tuah coin didn't change your mind on that.
What?
The Hawk-Tuah coin.
Oh.
Also, Alexis, how do you suggest people handle FOMO in the case of something like Bitcoin?
That's an interesting question. I think there's an old quote that the key is to keep your head when everyone else is losing theirs. And it's really hard, right? I mean, the thing keeps going up and up and up and up. It's guaranteed to go up. It never goes down. It never has any corrections. It only goes up. I'm being extremely facetious when I say that. How can you avoid, piling in when everyone's telling you you're being an idiot? And by everyone, I mean the people on Twitter that follow such things. Microsoft, some Microsoft shareholder proposed in the Microsoft shareholders meeting recently that Microsoft buy Bitcoin and put it on its balance sheet. 99.4% of the shareholders voted against it. So it's certainly not everybody saying buy Bitcoin, but if you're a millennial and you're into techie kind of stuff, it could seem like everybody is doing it. And I think the only answer to that is, what happens if everyone is telling you to go take a handful of pills out of that bowl at the party and do that? What if everybody is jumping off a cliff, as my mom used to say when I was 12, and everybody was doing something or other that wasn't really a particularly good idea to do? Keep your head. And if you don't, I mean, if you believe in it, then I guess have at it. I'm sure there'll be some questions about that later. But if you don't believe in it and you just think you have to be in it, you don't have to be in it. It's always possible to opt out. And as Warren Buffett says, in investing, there's no such thing as a called strike.
Okay, we have a few super chats. Thank you, Michael Sweet, the sponsor of today's episode. Michael says $10 for gold and $10 for Bitcoin. What say you all? Guess what you want to say, but go ahead.
So something I've tweeted many, many times, and I'll say it again here for the record. Bitcoin is obviously superior to gold at skyrocketing, also crashing. So if you want to turn $10 into $10,000, gold isn't going to do that for you. Obviously, the whole point of gold is stability, not skyrocketingness. The thing that has skyrocketingness as one of its attributes is Bitcoin. Now it could also crash. It could turn your $10 into $1, but it could turn your $10 into $10,000. So if you had to pick one, and the goal was to turn $10 into $10,000, obviously it's Bitcoin. Gold isn't even in the running for that particular exercise.
We have a couple more super chats. Thank you, Jonathan. Jonathan says, congrats to ARCUK on a great year, and hello, Keith. Thanks, Jonathan. Thank you, Bonnie, for the super chat, and thank you, Jonathan, for another super chat. All right, Daniel, the producer, asks, what is the difference between the dollar, gold, and Bitcoin?
What is the difference between them? Money, irredeemable credit that's backed by debt, irredeemable credit that is unbacked by anything. How's that for a short answer? Now, what do I mean by that? Money is the most marketable physical commodity. Now, why physical? We're physical beings. We live in a physical reality. And there are times, not everybody and not every day, but there are times when you need to be able to literally take your physical marbles and leave the banking system, the credit system, whatever you want to call it. And anything that is irredeemable, such as the dollar or Bitcoin, doesn't give you a way to opt out of the system. If you're in Bitcoin, you are dependent on the ledger and the miners and a whole bunch of infrastructure that very, very few people understand. So gold is that thing. You can physically take it. It represents final payment. There's no other kind of payment more final than taking something physical. The dollar used to be redeemable credit, and then they made it irredeemable by degrees in 1933 to Americans and 1971 to foreign governments. And then Bitcoin, but the dollar is backed by debt. If anybody's wondering what gives the dollar value, it's that every farmer, every manufacturer, every shipper, every distributor, every retailer borrows dollars to finance their businesses, which means they necessarily must get dollars to service their debts. Otherwise, the banks will take everything they have. They have to get dollars, so which means they have to price in dollars, they have to receive dollar revenues, or else. And so everybody who's producing everything is relentlessly, ferociously producing and dumping whatever it is they produce on the bid in order to get dollars. And if we measure the value of the dollar as the inverse of consumer prices, and every consumer product manufacturer is relentlessly producing more and more in order to dump it on the bid to get dollars, that's why the dollar holds up in value. Bitcoin has no such thing. Its only bid is speculation. And right now, speculators are super, super excited. Could it go to $1 million? Yeah, it could. Could it go to $1? Could. Anywhere in between? Yeah, it could. But it's not tied to production. It's not tied to producers. It's not borrowed to finance any kind of production. It can't be borrowed to finance any production. Imagine you're a farmer and you borrow $1 million worth of Bitcoin to finance next year's crop. And then you have to pay $3 million back. You're broke. Farming doesn't have that kind of margin. Same thing with manufacturing, same thing with everything else. So in short, that's the difference between gold, dollar, and Bitcoin.
Alexis asks, is Bitcoin a hedge against inflation? What is inflation? Where does it come from? And how does one protect themselves against it? That's like a question into one, but yeah.
Sounds like what, 3 or 4 questions. Is it hedge against inflation? No. It's a high beta, almost NASDAQ, which is something extremely volatile. Even gold, and I've written about this, does not necessarily go up when consumer prices go up. And the reason is because there are many large non-monetary forces that push consumer prices up. And in recent years, we had a COVID lockdown, which destroyed whole swathes of the economy. Companies were either just shut down for, the better part of a year, or even just ruined and put out of business. And then the unlock caused this incredible whiplash. All the ships, all the rail cars, everybody was out of position. Even today, wait times to get any kind of imported thing are multiples of what it was pre-COVID. We still haven't sorted out supply chain yet. Massive force for pushing prices up. That's number one. Number two, green energy restrictions. Here in the UK, they passed 2 stupid laws around 2017, plus or minus a year, one of which required all heavy users of energy to switch from coal and oil to natural gas, which is more expensive than coal or oil, or certainly coal. Number two, it basically banned domestic production of natural gas. It banned fracking, which is how natural gas is produced here. So all of a sudden, the response to that, and then the perfect storm was COVID, when importing Christmas tree ornaments, let alone gas, became almost impossible. The price of energy in the UK went up 15 times. That's 1,500%. Obviously, that had an impact on the price of anything that is made or distributed with energy, which is pretty much everything. And of course, price of gold doesn't respond to that because this is a non-monetary force. Third is tariffs and trade war. Something called Brexit. UK finds itself with a lot less trading ability with the European bloc than it had. In the United States, we're about to find out, I think, just how far, trade war can be taken, and tariffs, massive increase in consumer prices can come about as a result of this. Especially if at the same time we deport tens of millions of people, and that's the workforce. So we want to force all the companies to build factories domestically, and then we deport everybody that might work in those factories. You could see consumer prices go up by 5x in a scenario like that. I don't know how much they're going to go up. Price of gold is not going to respond to that. And there are other non-monetary forces. I talk about regulation, which I use the term useless ingredients. Regulators force producers to add things that do not add value to their products, such as methyl butatetraethylene, MBTE, I think is what it is, into gasoline. I don't know if you have that here. It's a big thing in the US.
Diesel engines.
Well, for petrol.
We have some diesel engines here. We have absolute, and we have to have an additive in the diesel engines to reduce emissions.
Yeah, so most people don't even know about these, additives, and it's in everything. It's in every restaurant kitchen. It's in every, vehicle. It's in everything. Most people don't even know about this stuff, and they certainly don't value it. But it certainly drives up the price of everything that is subject to regulation, which is everything. So no, it's not a hedge against any of that. That's the first thing. Second thing, what's inflation? Most lay people would say, most lay people would say, inflation is a rise in consumer prices, or a general rise. The monetarists will get pedantic and say, no, it's an increase in the quantity of money, which they call the money supply. By the way, it's not a supply, it's a stocks, not a flows. But they would say it's an increase in the quantity of money, which linearly and directly causes an increase in consumer prices. So an increase in quantity and an increase in consumer prices are treated as if they're the same thing, which is why everybody gets confused about that. And I don't agree with that. I think that when the government artificially increases the quantity of dollars, which by the way isn't money either, there are 3 possible outcomes: rising consumer prices, stagnant consumer prices, and falling, or at least soft consumer prices. And you have all these non-monetary forces, monetary forces pushing consumer prices up. Monetary force could actually be pushing it down. And we had 40 years of essentially that. It depends on interest rates much more than in quantity. But I define inflation as the counterfeiting of credit or fraud, monetary fraud. And so if you think about at a very, very simple level, suppose I come to you and say, I would like to borrow 100 quid or $100. Well, you kind of want to know something about my character, something about my income, and probably something about the purpose for which I'm borrowing. And suppose I say, well, I don't have any purpose, but I'll somehow, I don't have any income either, but somehow I'll get you back. You know, and then you look at my character and say, well, here's a deadbeat who's defaulted on all the other loans. Everybody's made the mistake of ever giving this guy in his life. No, I wouldn't want to give this guy, anything. If the government somehow forces that credit to occur anyway, that's counterfeiting, because everyone knows it's never to be repaid. It will not be honored. And so it's the counterfeiting, it's the monetary fraud that I would call the inflation. Advocates of Bitcoin say that it is sound money. My response to that is it isn't money at all. And it doesn't protect you from this? Well, not really. It's a highly speculative instrument of some sort or another, and it can skyrocket in price, it can crash in price, and it can crash in price just at the moment when consumer prices are rising. It can crash in price when consumer prices are falling. It can crash in price, nothing to do with consumer prices. So I'd say no, it doesn't. There's nothing to do with protecting you from any of that. Did I get all the parts of that question?
Yeah, Alexis approves.
Okay.
Thank you, Michael, for another super chat. Michael says, Michael asks you to challenge a statement by somebody else here in the chat. I'll read that statement in a bit. There's a few other super chats. I want to also get questions from the audience. So if anybody has a question, think about it for a few seconds and I will get back to you. Thank you, Apollo Zeus, for the super chat. Apollo Zeus says, ho, 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 here's some dough. Merry Christmas, ARCUK. Thank you. Yeah, super chatters absolutely deserve applause. And Bonnie asks a question, which of course I will have to answer here. Since Silver Rose Bakery is your sponsor, is there a stunning dessert table you'd like to show us? Well, no, Silver Rose Bakery did provide the desserts for our US Christmas party. Yeah, we had one of those this year. That was kind of closer to them. That Christmas party was in San Diego. They are based in Phoenix, where Keith is also based. Yeah, we had that in the US Christmas party, and that's all the more reason to come to the next one. Okay. Yeah, we have another 5-part question from you, but I'm gonna see if there's anybody that actually 5 parts. I'm not exaggerating. Any questions here, Bill?
How do you see the threat to gold from other metals that are, let's say, tungsten or other future metals that have similar characteristics or that can be used for money?
So should I repeat the question?
Did it pick it up?
That's it. Okay.
Okay. Yeah.
So I had it was actually recorded on YouTube, a debate under the auspices of something called the Soho Forum, which is sponsored by the Reason Foundation. The debate took place in Auburn, Alabama, at the premises of Mises Institute. And it was gold versus Bitcoin, myself and Pierre Rochard. And Pierre was talking about that the fact that tungsten, people may not know this, tungsten has almost exactly the same density as gold. It's off slightly. If you had really sensitive scientific instruments, you'd be able to tell the difference, but certainly not in your hand. It's almost exactly the same. Gold is, for those of you who haven't held gold, it's really, really dense. It's much, much heavier than it has any right to be. You know, something like this would be a couple of kilos. It's astonishingly heavy. And tungsten happens to have almost exactly the same density. So he said, well, the problem with the gold standard is you have to constantly worry about counterfeits. Nobody can tell the difference, blah, 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 blah. And he went on. So my rebuttal, I went over and I happened to bring, I don't have it with me now, but I brought to that debate a gold eagle, an American gold eagle coin, which has 1 ounce of gold in it. And I held it up to the audience, everybody could see that, yes. And there happened to be a little table on the stage. There's a couple of chairs, there's a little table, and there was a lectern over here. And the microphone was handheld. It wasn't like a fixed thing like this. So I said, can everybody hear this? And I kind of tapped the coin on the table. And the audience said, yeah, we can hear it. I'm gonna do kind of a little experiment here. Drop the coin on the table and hold the mic really close to it. And what you get is this ting, 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 ting. I said, if that were gold plated or gold painted tungsten, that would have gone tink. The difference in the sound is so obvious. And then the whole audience was like, he answered that one. So yes, you got to think about it. What I said to Pierre was, don't make a mountain out of a molehill. Yes, you have to think about it. It's not that hard. And in the times of the gold standard, every merchant knew how to, you rub the gold on a little stone plate, and with an acid, you can tell the purity. It's not that hard.
By the way, I didn't know that. I watched that debate. I didn't know it was in Alabama. I assumed it was in where they usually have their debates in New York. This was actually an away game, and you won. Okay, the question that Michael wanted me to ask, there are a couple of statements here by the same person. Bitcoin is better than money because it cannot be created, and unlike gold, you cannot find more. Bitcoin is better than money because you can transfer it internationally without permission. Governments cannot block you as long as you hide from them. Bitcoin is better than gold because it is native to the internet. You can move it between permission. That's enough. Yeah. Any comments on that?
He's saying better than money, meaning better than gold. That's kind of an interesting Freudian slip to sort of acknowledge in the question gold is the money. There's a meme I sometimes like to use when people talk about the attributes of Bitcoin and then redefine money so that it must necessarily include the attributes of Bitcoin. And it's a little comparison chart of a little plastic toy frog watch versus a Rolex. And so, it has kind of there's a picture of the frog watch, which is green and plastic, and a picture of the Rolex, which is gold. And then, a couple of rows, and one of which just tells time, and they both get a check mark. And one is green, and only the frog watch gets the check mark for that. And the third one is frog, which the frog watch gets a check mark for, and the other one doesn't. And so Bitcoin does all these nifty things, which is true. It's not true that it's private. Every transaction you've ever done is actually traceable back to you. Should anybody ever figure out your wallet ID, all of your activities can be pinned on you. If anybody has any serious motivation to do so, or any serious resources, i.e. the resources of the government, they can do that. There's a very famous guy who's now rotting in prison. I think he's in solitary confinement, and I think he's ineligible to ever get parole. A guy by the name of Ross Ulbricht, who had a screen name called Dread Pirate Roberts. And Ross is one of these guys. He's obviously extremely tech savvy, was extremely careful, much more careful than most people even have the education to know how to be that careful, let alone willing to go to that degree. Never logged in from home. He went to various public libraries to use their computers to log in. And this guy was very paranoid. He made one little mistake once, and they got him. They also forced him to divest his Bitcoin. So to say the government can't confiscate your Bitcoin, well, somehow they got his Bitcoin. And I think the answer is, if they hold your person physically, they can get you to divulge anything they want, right? I mean, let's be honest about that. Bitcoin can be transferred, yes, but one thing that's clearly coming and has already started to arrive: anti-money laundering, know your customer regulation, any on and off ramp to and from Bitcoin and fiat currency, which is what you need in order to spend it, is going to go through these checks. Any company that doesn't want to go through those checks will be debanked. So increasingly, I think people are going to find that Bitcoin isn't really going to work to bypass all the government, layers of the Bank Secrecy Act in the United States and all of these, regulations. I think it isn't really going to be a workaround for any of that stuff anyway. I don't know if I get all parts of the question.
I think so. With the next question, there will be many parts to get. You kind of touched on some of this.
basically, isn't Bitcoin better money since it cannot be created and you cannot find more?
Oh, yes. The central point of my, they said in the debate, we could bring a slide deck. I brought one slide. And the slide that I brought, so just imagine this is a monetary level slide. And it says the price of gold for 5,000 years. And it was a flat line of 1 ounce equals 1 for 5,000 years. And I said, now, okay, you could assume that this is a meaningless tautology. A is A, 1 is 1. No. What this is saying is that, yes, it is true, gold is constantly being mined. But what it's saying is that the marginal utility, which is the value of the next unit of gold, is not diminishing relative to all the previous units. So the value of the X plus 1 or N plus 1 ounce of gold is the same as the N, is the same as the N minus 1, is the same all the way back, in a regression all the way back to the first ounce. So the marginal utility of gold is not diminishing, which means its value is a constant, even if its quantity should be going up, which is exactly the property you should want and expect if something's to be money. Imagine, we'll use an analogy to construction and the concept of a meter. Now, a meter is about yay big, right? Now, imagine if the meter shrunk as we went up every floor in a skyscraper. Imagine if we had to adjust the 72nd floor meter was about this long. I mean, nobody would be able to build a building that would stand. I mean, everything would crumble. And this is what the economics profession tries to do with fiat currencies. So the creator of Bitcoin was absolutely terrified that Bitcoin did not have this property that gold has, that Bitcoin did not have a marginal utility which is non-diminishing, i.e., he believed, and probably rightfully so, that the marginal utility of Bitcoin does diminish. And so he had to put in a hard cap, which is kind of central planning. Somebody decided with a capital D what the right quantity is. And whenever somebody is deciding like that, you should think of Monty Python and the Holy Grail. And there's the holy hand grenade of Antioch. And in my counting, thou shalt count to 3. And thou shalt not count to 2, except on thy way to 3. Thou shalt not count to 4, and 5 is right out. Well, 21 million is the right number. Thou shalt not count to 20 million, except on thou way to 21 million, and 22 million is right out. Well, the whole point of Monty Python was to mock this and say, well, how the hell do they know? And so the problem is because Bitcoin's quantity can't respond to changes in demand, as gold's can, then only Bitcoin's price can respond. Now, there was a time when the Bitcoiners used to tout this as a feature. And I don't know whether I get any credit in forcing them to backpedal away from that. But I point out that, yes, that means Bitcoin is necessarily and will always ever be unstable in value because its quantity is fixed. And so now they back away from that and say, well, its value is going to be stabilized when its market cap gets big. And they used to say that to me many, many years ago. And I said, well, what do you mean by big? $100 billion. That's what they earnestly told me at the time. And then when we passed $100 billion, well, it's clearly not stable now. When will it stabilize? If market cap is going to make it stable, when is it going to stabilize? Well, when it gets really big. Okay, what's really big? $1 trillion. Well, we're way past that now. When is it going to get stable? It won't. It cannot. And if it's not stable, it doesn't work for financing production. It doesn't work for savers. So Pierre and I got into a whole thing about octogenarian widows. And I said, how is an octogenarian widow supposed to tolerate a 79% drawdown? At the time of the debate, Bitcoin had dropped from, what was it, $69,000 to about $13,000. I think it was 79%. That number sticks in my mind. Somebody's going to ding me in the comments and say, it's not 79%, it was 72%, whatever, but it was a massive drawdown. Imagine you're 87 years old, you're widowed, you have no further income potential in your life, and you just lost 72%, 79% of your money. How is this going to work? And the answer is it doesn't.
Okay, the person in the chat who's making some statements challenging you is still making statements, which I will happily read if they're sent in super chat form. You know, 1 or 2 Bitcoin super chats is enough. Thank you, Maria, for the super chat. Maria asks, does Keith hold any crypto or Bitcoin?
I kind of make it a point not to talk about my personal investment portfolio for similar reasons as not giving investment advice. So I think I'll leave it at that.
Then I will go to the 5-part question by Alexis.
5 parts. Okay.
Why is the Trump administration pushing for Bitcoin? What is in it for them? Is there anything more than an electoral agenda here? Could government actually let it roam free, or could that actually signal a danger for our liberties? That was 5, right?
Could it let it roam free? What does that mean?
What does that mean?
So basically, like let people trade with it without any intervention.
Well, they pretty much do now, other than becoming an anti-money laundering regulation.
Assuming it becomes significant.
To me, it becomes significant. Okay. I can't really say what's in Trump's head, but there's a very funny, and people have been saying for many decades that politics makes strange bedfellows. And for whatever reason, Bitcoin has now become a big cause on the right. And libertarians, of course, also. So that aligns with Trump, and he, I have to assume that, everything's political at the level of the president. There's no such thing as, ignoring politics and having a policy just because. Politicians don't get elected by doing that. They do what's popular. I think what the Bitcoin world is expecting right now, and the reason why the price has rallied so far so fast, is that this Senator, I think Lamas from Wyoming, I don't know if I'm saying her name right, has proposed that the U.S. government buy, and I love when they use the word strategic, it's kind of like for the people, or the public good, or our great American families. You use these catchphrases, which have absolutely no meaning whatsoever, but it warms the cockles of people's hearts. Very appropriate for Christmas time, I think, in those terms. Strategic Bitcoin reserve. And she actually proposed that the government revalue its. So for accounting purposes, and under accounting law generally, you're supposed to, if you have an asset, you're supposed to hold it at the lower of the price you paid or the current market value. So the government has all this gold at there's historic reasons, and it's been this way for many, many decades. I believe it's at $42 an ounce is what it's holding on its books. They should revalue that to $2,600 an ounce. That gives them a huge credit with the Fed, and so without increasing the debt, this is all just a technicality, that gives them leave to go buy hundreds of millions of dollars worth of Bitcoin, which of course is great exit for anybody who's been betting on the Bitcoin price. And we'll call this a strategic reserve. As soon as you do that, of course, this is no longer, Bitcoin was billed as digital freedom. And now we're lobbying the government in order to buy it to drive the price up. Well, okay, we've left the realm of digital freedom and now we're into the realm of government subsidy. And what comes after that? Well, the government's the bag holder, and when everyone stops buying, then there's going to be a wave for selling, and the price crashes back down, and and Bitcoin will do the yo-yo.
Okay, well, Apollo Zeus, thank you for the super chat. Apollo Zeus says, ho, 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 me again. Was just wondering, will there be any karaoke and dancing going on tonight? Ho, ho. Well, there are still trains, I believe you're a couple of hours away. You can find out, but what there will be is food, which is coming soon. So I think we will wrap it up here. Thank you, Keith. Thanks everybody for watching. We're back tomorrow with the Daily Objective at the regularly scheduled time, and more along the lines of the topics you usually see here. We will we'll be talking about Biden recently taking credit for Israel's successes in the war that he has opposed for over a year. Thanks again, everyone, and Merry Christmas.